Hello friends, welcome back to my channel Quest for Knowledge. It's me Naghma here, and today we are going to discuss very important two questions which is surely going to come in your final year exam in economics. Okay, without wasting time, let's get started. So the first is, what is macroeconomic identities? So first of all, you need to calculate GDP. So tell me, what is mean by GDP? GDP is gross domestic product. GDP is the aggregate goods and services which has been produced in a particular year. Example, will take 1 year. So in 1 year, what are all the overall goods and services produced in our country? So that is what is our GDP. So how we will calculate GDP? Consumption plus investment plus government expenditure and plus export. In that we will remove the import value. So whatever the value left, that is the X minus M. X is export, M is import. So export value, in that we will remove import value, and whatever the value comes we will add. So overall, by this we will calculate our GDP. So in GDP we need to, while calculating GDP, we will remove any of the NRIs who are working in any of the foreign countries, but we will consider any of the foreigners working in our country. Okay, so by that we have calculated GDP. So after GDP, what will be the thing we need to calculate is NDP. Okay, how you will calculate NDP? By removing depreciation from GDP, we calculate NDP. Okay, after that is net domestic product. After that we need to calculate gross national product. So gross national product is nothing but the money value of goods and services produced in a year. Okay, so the money value is called as GNP. Okay, gross national product, the money value. Now we need to calculate NNP. Now how to calculate GNP? Now we know. Okay, so GNP is nothing but the money value of final goods and services produced in a year in the domestic country. So that is gross national product. Now how to calculate net national product is that when we remove depreciation from GNP, we'll get net national product. Okay, so after NNP we need to calculate, but NNP can be calculated in two manners. Okay, NNP at market cost and NNP at factor cost. What is mean by factor cost? Means when we add up all the factors of productions like lands, labor, okay, lands, rent, labors, wages, capital, interest, and organization profit. So these all are the factors of productions and the rewards for the factor of production. So when we calculate NNP at factor cost, and we can calculate NNP at market cost, so there is a different formula for both of them. So when we calculate NNP at market cost, we need to minus NNP minus indirect tax plus subsidies. So that is the calculation of NNP at market cost. So we all know that GNP minus depreciation is NNP, and NNP can be calculated in two manners. One is the factor cost and one is the market cost. First we'll calculate NNP at market cost, which is NNP minus indirect tax plus subsidies. Okay, indirect tax plus subsidies is the market cost. NNP at factor cost is equals to, how we will calculate at factor cost is that NNP minus indirect tax minus subsidy. So that will be calculation of NNP at factor cost. After calculating NNP, we need to calculate personal income. How we will calculate personal income? First we need to remove all the, from national income we need to remove undistributed profits. Like many companies keep kind of a reserves. So many company keeps reserves and all which is not distributed among the people. So that profits are undistributed one. So from the national income we will remove undistributed profit. After that we will remove corporate tax. After that what we need to remove is what and all the household people pay the interest to the government and firms, that we need to remove. What we need to add is only the thing is that what and all the government and firms pay interest the household, that only the money we need to add in this to calculate the personal income. By that we have calculated personal income. So personal income is equals to national income, which is NNP at market cost, is completely equal with the market national income. Okay, so national income minus undistributed profit minus corporate tax minus interest paid by household to government and firms will minus, plus interest paid to household from government and firm we need to add. Okay, by that we have calculated personal income. Now we need to calculate DPI, which is disposable personal income. So how we will calculate disposable personal income? It is the income of the household, all the households. Okay, so how we are going to calculate is personal income minus tax and non-tax payment. So tax will be the income tax, sales tax, so that all will remove, and after that non-tax payment means any kind of a fines, penalties. When we remove those kind of non-tax payment, whatever the money left is the disposable personal income. Now this will be the consumer's choice whether they want to, how much of the money they want to consume and how much they want to save. So such money which is completely used by the consumers, by the people, so for the consumption and for the saving, so that is disposable personal income. If you found this video helpful, do like, share and subscribe, and comment your suggestions below in the comment box, and thank you so much for watching.